So you just found out that there's a way to spend a fraction of the money compared to buying shares, have defined risk, and unlimited profit potential. Who wouldn't want to sign up for that, right? But you have to know there's no free lunch, that there's a trade-off. And so in today's video, we're going to look at how to use long calls and look at that strategy and decide whether or not it's something that you will put into your portfolio. So join me, shall we, as we explore how to use long calls. Hi, everybody. My name is Neil, and this is Option Theory. Thank you so much for joining us. Stick around to the end of this video. I'll do my pitch at the end. I do appreciate when you watch my videos to the end. It does help us YouTubers out, right? So let's talk long calls. Long calls are bullish positions for sure. They're defined risk. They have unlimited profit potential. And as discussed, there is there's a trade-off for that. So now, they are positive delta trades, meaning when the underlying goes up in price, your position will profit. If the position goes down, the underlying goes down, right? You will lose money. It is also positive vega, that's volatility, right? So if the volatility in the market or in that underlying goes up, your position will benefit. It's negative theta though, okay, which means that as time ticks by, if it doesn't move in the direction you want it to, your position will suffer. And that makes it less attractive, especially for those of you that will call themselves tasty traders. Is that you? Do you consider yourself a tasty trader? If not, I suggest considering at least looking at their material. I will definitely show some material that they have freely available. And in the description below, and we'll talk about that right now, there's going to be a link that was from February 12th, 2020, a little market measure segment done by Tasty Trade where they look at long calls. I will have that link down there for you to go ahead and check that out. Of course, I'd love it if you will finish this video and watch to the end. That does help us out. All right, okay. So I think I've said that already. Anyway, long calls. I like to call them lottery tickets. Why are they lottery tickets? Because usually the probabilities are really low. Why are they low? They're low because you're paying a debit for them. So even if you're buying at the money, if you spent $5 on the call, you now need the underlying to go up $5 just to get to break even. Well, at expiration, of course. So in case you want to see some visuals, if you're like me, you want to see what I'm talking about, let's go ahead and do that. We are in Thinkorswim, we are in paper money, and right from the get-go, let's say this. I think we all, when we first start trading, we like to think that we have the competitive edge, we have the know-how, we've got the system, we bought the special software. Maybe you do. I don't know. Maybe you've got the magic touch. Maybe you've got the special algorithm that you're going to be the super trader extraordinaire, right? Put it to the test. That's why in this channel, we use simulated trading, paper money. Go ahead. Some of you are going to tease me for it. I get it. I face it. But why wouldn't you test it out before you put your real hard-earned, blood, sweat, and tears at risk? So with that said, let's go on over and we'll use the SPYs. So let's go here, and I actually hit 5 by accident here. Let's go. I'm beta weighting my portfolio deltas here. But what we want to do is come up here and go to the charts. We're going to pull up SPYs. Hit enter, and we can see the chart for the SPY, the ETF that tracks the S&P index. And it'd be hard to not see the trend here. The trend being that it continues to go up. So, obviously though, about this time last year, the market took a real big drop, or what I would call a dump, due to COVID. And then it has recovered tremendously, and then some. So here we are at new highs here at a 467 cents. So with the bid ask being already 401, the market is closed today. Normally I don't do videos on when the market's closed, but this video is in response to whom I shall refer to as Mr. T, a young gentleman who wanted to know about buying calls. So that's why I want to do this video. So let's say that we want to buy a call in SPYs, right? So let's head on over to the Analyze tab, go to Add Simulated Trade, and we're going to be looking at the monthlies for I think it's May. Yeah, we're at 49 days to expiration. Good time. Let's go right here to at the money. And boy, there's a lot of option strikes available. I have all of my strikes set here. Yours may be different depending on if you're in Thinkorswim for the first time. Some things are a little different here. I've gone with the old school coloring as well too. I think it works better on YouTube camera. All right. So what we're looking for is the 50 delta call. Let's just take a quick look at that. That's like being long 50 shares of this, right? Rather than being long 100 shares or one share, this would be like having 50 shares. So if we go to the ask, which is where we are here at the 401, we're going to be buying that. So let me go ahead and somehow I had something in there. Buy the 401. Okay, it tells us that we're looking here at 50 deltas. That's what we just picked. We got one contract. Yours might say 10. Watch out for that one as well. Okay, what I think helps us understand what we're talking about is we go to this risk profile. We want to set our expiration in the top right, or bottom left in turquoise, 522, to this calendar in the top right, 522. And now we have the expected move set here in this light gray. And I like to expand that lighter gray area so it takes up a bit more of the room here of this real estate. The pink line here is going to be our right now. I'll call it right now. And in the turquoise line or teal line here, by the way, I have my 11-year-old son here laying on the floor watching me do this video at 6 o'clock in the morning. So kudos to him. I do hope he picks this up. Much like Mr. T, my 18-year-old emailer who went to my website and sent me an email, asked for this video. I hope you guys get a nice early start and learn this stuff way earlier than I did. I'd love to know, when did you start getting into this? All right. Anyway, here's where we are now. If you were to buy this call now, right, and SPYs were to continue its rally, right, and let's say it moved up to 402, right, you'd make $45 in one day. But remember that as time marches on, this pink line is going to move towards the turquoise line. And that's what we're talking about with the negative theta. So you can actually mimic this by the passage of time by using this little plus and minus here. You'll see that as time marches on, as we go day by day, right, you'll see that pink line begins to hug, conform to, match up with that turquoise line, right? And so if you were to stay right where you were, if SPYs were to sit at 401, you would continue to erode the value of that purchase that you made will go away, will work towards zero. And that would be the max loss. So let me go back in time here to today's date. There we are. And the max loss, you can see that here's the nice thing. One of the attractive parts of buying a call is here we are. If we paid $8.52 for it, that's the most that you can lose. And then when you see this unlimited profit potential, I feel like Aladdin here, right? So yeah, who doesn't get excited about that? But let's take a look at the probability of profit for this one. So this gold price slice here, what I like to call the goalpost, right? We can slide it and find out what the probabilities are of profit. And I like to do at expiration. So, and I want to have it be precise. So I let Thinkorswim do the hard work and calculations for me. I come down to this menu option here. I go to set slices to break even. And then I choose the expiration date, which is of course teal, turquoise, whatever you want to call it. My boy over here likes teal, so we're going to call it teal. All right. So here we are looking at a 35% probability of profit. So that's not particularly awesome, if you ask me. Profit at expiration. So that's what I call a lottery ticket. If you're a tasty trader, you tend to believe more so that it's better to be the house than to be the one doing the gambling, right? So in this case, it doesn't fit with my belief, and I don't think it fits with the data either, right? So when I say it doesn't fit with the data, if you check in the description, there's a link down below for the long calls episode. And in there, they actually link to the slides that they use, their research slides. I'm going to briefly drag this onto screen for you so you can just take a quick moment to read this, right? You can also see the URL up here. I want you to go to them, right? Because, hey, look, I'm not claiming to be the guy that did all the research. Tasty Trade is like, that's where it's at. So long call strategies have problems making consistent profits, even in a favored situation. These market measures are great short videos where you can get all the information I think you'll need to know why long calls may not be the strategy that you want to go with. That doesn't mean we can't use them, but we're probably not using them by themselves. So what they'll do, and this is a little bit of a teaser for you here, I'm not going to click it, I want you to go watch this. They then compare the performance of, instead of buying 30 delta calls, they sell 30 delta puts. And they do that even throughout dips in the market, like in 2008 and 2009, when the market melted down due to those real estate things. I'm totally spacing out on what they're called right now. Mortgage-backed security. I can't remember what they're called. Something like that. But anyway, check that out for sure. Let me drag that back off screen. So we said 30 delta calls, and I have a 50 delta one. So let's go ahead and change that. Let's go back, find a 30 delta call. I have my deltas are right here. And if you don't have deltas on your screen here, go ahead and click this, and you can change where you see those. Those are options, theoreticals, and Greeks, and I have delta selected here. Looking for the 30 delta, there's one. So if we buy that, here, it's always good to delete your previous position. I do not claim to be perfect. I do not claim to be an expert. That's one of my things here. I want you to see that this is the kind of thing that you can do, because if I can do it, you can do it. You have to believe it. All right, so let's go over here to the ask for the 30 delta. Click it. I'm now long, not really long. I'm analyzing long call for $411. Strike price would cost me a debit of $370. Let's go back to that risk profile, and we could manually slide this over, but once again, we're going to let Thinkorswim do that for me. Now we're looking at a 28% probability of profit at expiration on that one, but a much lower maximum loss. Remember the trade-off. You want these great things of limited risk and unlimited profit potential. Here's the take, or what you have to give. You have to give up the probability. The house here has a 71% probability of keeping your premium payment. So do you want to be Geico and have a 71% probability of keeping somebody's payment? Or do you want to be the person buying Geico insurance and having a better probability that you're not going to have an accident? Right? So I think where you can see where I'm going with that one. Now, in a couple of previous videos in this channel, which we almost 5 days a week, we do videos, right? And not always. Sometimes I miss them. Sometimes I hit that darn snooze bar. But I did mention how I had recently watched a trade talk by Tony Batista. That will also be in the description below. Please check that video out. And in this video, he talks about how to be able to take a position in the SPYs, which may be not really reachable for some, because the SPYs, if you wanted to own 100 shares right now, you'd need $40,000, especially in an IRA. If you're in a margin account, you don't need that much. But if you're in an IRA account, you're going to need, everything is cash secured, right? So you're going to need $40,000, and it's going to have that kind of a buying power reduction. He talks about some great ways, and you can use long calls to simulate what we call simulated stock, right? I wanted to go over that with you today, and I think that would be kind of cool, a neat way to use long calls. Let's take a look at this as an option. I hate saying that, but there it is. All right. So I've got all my simulated trade positions are cleared. Here's one way to take a simulated position in SPY, simulated stock. All right. You could always find, and I should say always, you can look at your deltas here on the calls. You can buy a deep in the money call. Now, the tough part with doing that is the further you get away with these 90 deltas, you're going to find that the bid ask is getting wider and the open interest is lower and the volume is much lower. And so maybe just buying a super deep in the money call may not be the best way. So in the video, Tony talks about a way to do this with 3 legs. So we're going to talk about that, actually. So here's how you would go ahead and do this and have a much lower buying power effect. If we go over to the 50 delta here, which in this case is 401, and we buy the 50 delta call, that's going to give you the 50 deltas, right? And if you go ahead and sell the same strike put, that's another 50 deltas. I want to actually go ahead and control click instead of that one. I want to control click. And now I'm 100 deltas. But the buying power effect, which for some reason, some odd reason here, it's not showing it. That would be the full 40,000, or 40,100, right? That's how that would be in an IRA for sure. So how can you reduce your buying power effect? Well, what you do is you come on the put side and you buy a 5 delta put. So here's a 5 delta put, the 342. I'm going to go ahead and control click that. And now, sure, we're not long 100 deltas. We're long, let's call it 95 deltas. Okay, really close. But the buying power effect is significantly less. So because whatever reason, it's not showing what we want to show here in buying power effect, what we want to do is go ahead and switch over to Tastyworks so we can see this same thing here. So we're in SPIs. We're going to go to the 49 days to expiration May monthlies. Do the same thing here. We're going to look at buying this 401, selling the 401 put. Okay, there's that buying power effect that we would need $40,000 of buying power reduction or that much in our account. Maybe you don't have that. And according to Tastyworks, Tasty Trade, most people, their account size isn't that big. Can't handle this position. So how can we use less buying power? So let's scroll on up and find the 5 delta put. There it is. And I'm going to click on the ask to buy the 342. Now, instead of needing $40,000 for this position, you only need 6. That might be doable. And for the next 49 days, you're essentially long 100 shares without needing $40,000. So, while it's not necessarily a long call, I like to think of it as it starts with that. That's the foundation of it. And if you didn't want to and you were to magically get filled, you could get a similar risk profile by buying an in the money, super in the money call round about the 95, so 341 here. So if I were to go ahead and buy this one, you'll see it's the same buying power effect of $6,000, right? Probabilities are not awesome. We're talking 48% probability of profit, but that sure beats the 30-somethings that we were in before. So let's head on back to Thinkorswim here where you can see me. And I'm going to say this. If you've made it this far into my video, I do give you a thumbs up. I do appreciate it. If you felt this video has helped you out at all in looking at long calls and whether or not they will fit as a strategy for you, then I would appreciate it if you hit that thumbs up for me too. I get it. You want to test out the long calls. Maybe you've got the secret sauce, the magic recipe that we talked about earlier. Test it out. Buy your long calls here in paper money and see how they work out. Keep a log, keep a track. You know, statistically, probabilistically, you should lose more than you make. And that long calls segment on market measures that I put in the description below will show that for you. Watch that, okay? So, thank you so much for making it this far. If you are new to this channel, what we primarily do here is we use cherry bomb trades from Tasty Trade to build out a simulated portfolio to test our mechanics. It's designed to be an interactive channel. So it's 2 steps here if you want to do this with us. Step 1 is finding the link to sign up for Tasty Trade's cherry bomb email list. It's not me. I don't get any email. I don't get any kickbacks, nothing. This is just me thinking, here's some great info. It's free. Go ahead and get it. That's number 1. Step number 2 is hitting the subscription button for my channel. If and when you feel you're ready, also ring that bell, because option trades have time value, and getting in these trades at the right time is important. So you'll be notified if you ring that bell when these videos come out. I do appreciate your time, all your thumbs ups, and all your views. I look forward to seeing you hopefully soon someday. And until I see you, may the market be with you.